Greetings and salutations, everybody. Thanks for joining us. I'm here today with Nick Macron of Oxford Mortgage, and we're going to be talking today about the implications of the NAR settlement and what benefits and pros and cons there are with buyers and with sellers, and how it also helps the lenders out too. So take it away, Nick.
Yeah. So listen, Rick, I think that thanks for having me, first of all. I think that being here in Colorado, right, I think there's a lot of things that were already in place, right? I think this NAR settlement sounds a lot bigger and a lot scarier than it is for the people in Colorado, primarily because you guys have always operated with a buyer's agency, which is a big part of it, right?
Right. Exactly.
There's a lot of states that don't even have a division of real estate, right? So they're like, I mean, they've got to figure out some things here, right? So I think for in Colorado, I don't want to go as extreme to say it's just going to be business as usual. I think there's going to be some differences in how business is conducted and how conversations are had. But I think for the most part, it shouldn't be too earth-shattering for buyers and sellers. But yeah, let's dive into some different questions here.
All right, great. So in other words, I think the big worry that a lot of people have, especially agents, is the concern about the removal of MLS compensation, and what does it mean for buyers and for sellers?
Yeah, I mean, listen, so for people who don't know what that means, right? That's just that no longer in the MLS will you be able to see if what the seller is willing to pay, not pay, whatever, right? And the idea there, right, Rick, is that they don't want people to be steered away from properties because someone's not willing to pay. I think every realtor is going to handle this a little bit differently, and I think the conversations will be had with their buyers, right? I mean, are you going to be calling listing agents and asking kind of what their sellers are thinking so that you can prep your buyers? Yeah, there might be a little more work on the back end. I think that it won't affect the buyers at all, because what will end up happening is the buyers will go to the houses. You're going to take the buyers to the houses they want to see, right? And then it will be addressed on, the seller isn't willing to pay this or not willing to pay that or is going to pay this. And then we figure out how to set that up from there, right?
Because already in the buyer, one of the things that the Department of Real Estate has changed on the forums that have come out is that on the buyer agency agreement, it is described as to who and what compensation is going to be offered, who's going to be paying, and what's going to be offered. So that conversation, to me, I feel is much more transparent with the buyer, so that they're on the same playing field.
Well, I think that's important, Rick, that you say that, because I think what sometimes got lost before, and I'm not saying you ever said this line, but I know that even in homes that I have bought through the last 20 something years, there's always been this, even though it's not totally true, it's not true, but it felt like, oh, well, the seller pays the buyer's agent. It's not really true. It never was true that the seller paid the buyer's agent. The buyer has always paid their agent. It was just done through price. Right. So, I'm making up numbers here, but if a buyer's agent is making $15,000 and the seller is coming out of their proceeds, the buyer's still paying that $15,000 in that property, right? So what's great about this new setup, in my opinion, is that it creates transparency where buyers know exactly what's what, right? What your commissions are. And then it'll be addressed on each property that they think they might want to make an offer on. I've said this before in some of the meetings that we've had in the past. Lenders went through something like this with Dodd-Frank, where we were no longer able to make origination fees and yield spread being what the bank would pay you at a specific rate. And I remember when this all went down, I was like, oh my gosh, we're going to go out of business. How are we going to do this? It's the best thing that ever happened in our industry. It created conversations with the consumer that needed to be had anyways. But just with the way things were set up, it was that they weren't being had on a regular basis the way they should be. So it's good. It's a good thing.
Okay. So there
Yeah,
is much more transparency in what you had mentioned, and also in this situation, because now everybody, including the title companies too, title companies,
right.
lenders, and the agents and buyers, everybody, sellers, they basically know what's on the table. So
That's
it's
right.
not going to be that surprise at the end, at the closing instructions,
Like, holy
closing.
smokes, you made this much money. Yeah, there's not going to be any of that.
Right,
Right. Yeah,
right,
this is
right.
it's going to be much more transparent. And I think that in these kinds of, well, in any business, but our business specifically, because we deal on it on a daily basis, transparency is never bad. Life, all the things, right?
Right,
So, yeah,
right. And again, it's that whole thing of, the agent is also presenting their worth as well,
yeah,
and the buyers are seeing what's being done, and you know, I
yeah,
guess in many ways, it's also prompting realtors and agents to basically step their game up.
yeah. And I think step their game up, but I think most importantly, because your game is always up, right? I mean, you're always doing the best you can for your clients, but
Right,
the great thing about this now is that you are able to convey that value up front,
right,
right? Here is what you're going to get for this,
right,
right?
right.
um, and it makes them more aware of what you're actually doing for them through the process. Because I
Right.
think in both of our businesses, a lot of times when we do a really good job
Hmm.
and it works out great for the buyer or someone refinancing or whatever, you're a seller, they don't know everything that you're doing, and sometimes they're like, well, we wrote on the first house we looked at, and we're closed on it. Yeah, well, congratulations, I found you the perfect house and
Right.
negotiated it for you, right? So this is a great opportunity where agents like you that bring high value
Hmm.
are just going to have to make sure they can convey that value. That's
Right.
it. And if you
Right.
can do that, it's going to be great.
Or is it not going to impact mortgage rates or terms?
It should not impact mortgage rates and terms. Um,
Okay.
Listen, I think if volume were to decrease because people, which it won't, because people didn't want to buy or didn't want to sell, I mean, you could see incentives and things like that come from lenders to try to get business moving. But
Hmm.
this this means nothing to banks,
Okay.
right? Yeah, it's still the rates are the rates, terms are terms. So yeah, it shouldn't
Okay.
change anything on that front for people.
Now, on that same line, is this going to have any effect or impact on how lenders market their services to realtors?
Well, I don't want to speak for all lenders, but I will say, like for us, for example, one of the things that we want to make sure that our realtor partners know is that we want to partner with you, and not just on getting your buyer's loan closed. We
Hmm.
want to partner with you on that initial consultation with your buyer,
Right.
right? Because they don't know what they don't know, right? So they're going to ask questions, and we want to make sure that whether it be a real estate NAR type question
Hmm.
or just a real estate question, or if it's a loan question, we can get them all answered in one fell
Uh-huh.
swoop, right?
Uh-huh.
And because here's what I think is the most important thing. If you have a buyer and you're trying to, and they have questions about how this is going to affect them, what we want to be able to show them is, hey, look, here's how it's happened for the last 50 years,
Hmm.
where it comes out of the seller's proceeds.
Hmm.
If that's what, and you want to put down 20%, here's what it looks like: payment, cash to close, all the things, right?
Right.
What if the seller won't pay anything?
Hmm.
Here's what it looks like. If the seller will pay half, here's
Hmm.
what it looks like.
Okay.
If the seller's going to make you bump the price up, here's what it looks like. That way, right at that first meeting,
Hmm.
they can see, oh, geez, this, even if I have to bring the whole commission myself,
Hmm.
who cares? It's a difference in payment of X or a
Right.
difference in down payment or of cash to close of Y, right? They can see that. And then there's not that weird moment on a Sunday night when they're trying to make an offer. And
Right.
the seller says this or that, and they're like, oh gosh, I don't know. I'm not comfortable. I don't know what this looks like. I don't know what that looks like. Yeah, they do. They've already
Hmm.
seen it, right? And it's not as
Hmm.
big of a deal as they thought,
Right.
right?
So in other words, you're providing them that upfront, basically, I guess you can call it the menu of different scenarios.
That's exactly right.
Yeah. And so
And we're
there's
going to
no
tell them,
surprises.
hey,
Yeah.
we're going to tell them, hey, listen, 9 times out of 10, this first option right here, the way it's been done, as long as you and I have been doing this, this is
Right.
how it's going to work out for you
Yeah.
right here.
Right.
But look at these other 3. If you had to, instead of 25% down, you brought 22% down because you were paying your own commissions. Okay, that's a difference in payment of $40 a month, whatever the number is, right? I think when people can see that and can, wrap their mind around like, oh, geez, okay, this isn't as scary as I thought it was going to be, then they can move forward with confidence.
So in other words, it is bringing much more options as we presented.
Yeah, right? I mean, look, man, I think now more than ever, just because, you and I are in the world, so we're hearing all the NAR settlement stuff. We know what's a big deal, what's not a big deal, what's going to change, what's not going to change. But for the consumers, all they're hearing is sellers are no longer paying real estate commissions, right? And that's just not true, right? So we want to make sure that they understand all that, and then they're ready to go, and it's just like always.
How are realtors adapting to the changes brought upon this?
Well, I'll tell you that, with realtor partners that I work with, the really good ones, they're just being more communicative than ever. That's it, right? They're making sure they're educating them. They're not having their buyer look through rose glasses at what's happening. They're making sure they understand, hey, here's the good, here's the bad, here's the ugly. Yeah, because I think that's all people need to know. Buyers aren't stupid. These are smart people making a huge decision in their life, and they want the information, right? So I think that's what I've seen from my realtor partners, including yourself, is people are just they're being communicative, and they're supplying information, and they're making sure that everybody's on the same page.
So it's basically another level of, once again, educating the consumer, because what they're hearing from the media in general is just part of the headline without the details.
Yeah. And listen, I think from a real estate standpoint, obviously you and I agree on that this is a good thing anyways, but the other thing that it's done is it's created a touch point. Clients, right? Like, hey, you may have heard about this. Let me be your expert.
Right.
Because I'll tell you, Rick, the one thing that is a fact in the negative, well, it's a negative for these people, but it's a positive for our business. The realtors who can't convey value, and the realtors who maybe got in a couple years ago when there was a lot of low-hanging fruit and don't know how to have professional conversations with people.
Right.
They're going away.
Right. So this is
going to happen. It's the exact same thing that happened in our business.
Yeah.
If this isn't a real job for you, realtor, and like us back in 08, 9, 10, 11, when all that went down, if this isn't a real job for you, lender, and you're not a professional, you will be gone.
Okay. So
this is great for guys like yourself and other realtors that this is their profession and what they put pride into. It's going to be a great thing.
Awesome. Now, can you briefly explain how this is going to protect the sellers?
Well, I think what it can do, potentially, I don't know that it really protects sellers at all. I think, except for the fact it makes it's always been possible. Let me start with this. It's always been possible to do this. The seller never had to pay buyer commissions out of proceeds. But there was this long-held belief in the industry that that's just how it was done. Sorry, you want to sell your house, it's going to cost you X percent.
It's always been negotiable.
It's always been negotiable.
Yes.
I think that got lost sometimes on certain transactions. People just weren't aware, and but it's always been negotiable. So, but I think what it can do is if you have a seller who is just in a weird spot,
where they got to make the numbers work.
They got to make the numbers
work. I need this much in order for that. Can you make it happen?
Listen, if they can't do it, it's going to limit their buyer pool, right?
Okay.
But if they have the right buyer, then it potentially could help them where it's like, look, we've got the X percent to pay our listing agent. I just don't have it. We can try to bump up the price, but I don't think it's going to appraise, whatever, right? It potentially could open some doors for sellers who are in a pickle on that front. But they are going to have to be prepared that you're not willing to pay commissions in any capacity, whether it be bumping up the price or whatever, then your buyer pool is going to not be as large as it would have been. right? Because I think when people get educated, when the buyers get educated, well, I'll speak for myself. If I were a buyer and you were taking me out to see homes, one of the things I would say to you is, okay, Rick, I understand your commissions. That's awesome. Find me a home where the seller is paying it.
Okay.
Right? Now, not everyone's going to say that, but there will be some that say, like, look, I barely have my minimum 3.5% down payment.
Right.
We have to find a place where they're willing to pay it. Even if we have to bump the price up a little bit, we can do that. But we need the seller to pay it.
Well, in that situation, I mean, clearly, like whether it's a first-time home buyer or even a veteran home buyer, that's where that definitely comes into play.
It does. It will come into play. It certainly will. Yeah. Now, listen, it's going to be like any other offer and transaction and stuff that you've ever tried to put in before. You put in an offer, they accept it or they don't. They counter, whatever, right? It may come together, it may not, right? But there will be certain buyers where that does have to happen.
Can you give us an example of how this lawsuit settlement will benefit buyers in a competitive market?
So I would say if it's a really competitive market, where this will potentially help buyers is if buyers are more willing to pay their own buyer's agent commissions. Right? And that doesn't have to be included in the offer. I mean, in essence, you're offering over asking price if you're not asking for commissions, right? So for the right buyers, if they're like, shoot, we'll just do this. Let's get this house, right? Again, if it's me and you, and I'm like, all right, man, I've got $100,000 to work with, Rick. Okay, well, how about we do this? How about you just put down X amount? Just making up numbers here. Why don't you put down 90,000? Pay your own commissions, and we won't ask them for it.
Right.
Because that will be different than what pretty much everybody else is doing.
Right. So it does have some form of an advantage for the buyer.
It could. Yeah, it won't work for everybody, but it's just like paying more for the house, right?
Right.
As far as the seller's concerned.
Yeah. Either way you look at the numbers, it's going to come out the same.
It's just another tool that's always been in your quiver, right? It's always been there. It's always been in a buyer's quiver. They could always do that.
Right.
But it just wasn't thought about very often. So I think that can just bring to the forefront another potential arrow to try to get stuff under contract. I mean, listen, there's a lot of great lenders and realtors out there, and they're all good people. But I think that this is a very saturated industry as far as realtors and lenders. The positive is that you weed out people that probably shouldn't be doing it. Right? That got in the business to do their mom and dad's deal, and they just keep riding it. Right. So I think that's good. And then I think, just like we talked about at the beginning, transparency.
Okay. Right.
It's a good thing.
All righty. Awesome. All right. Well, that's all my questions for you, Nick. Thank you so much for your time. And again, if you guys have any questions and you'd like to reach out to Nick, his number is going to be at the end. If you need to reach out to me, feel free to do so.
Yeah, that's awesome. We'll be back next month with something else. So,
all righty. Wonderful. Look forward to it.
Rick.
Thank you.
Talk to you, man.
Of course.